Commercial construction developers may hesitate on new projects after President Donald Trump imposed fresh tariffs on over 180 countries. Announced on Wednesday, the policy introduces a 10% baseline tariff on all U.S. trading partners, with additional levies including 34% on Chinese imports and 20% on European Union goods. While key materials like steel, aluminium, timber, and copper are exempt from these extra tariffs, steel and aluminium imports have already faced a 25% tariff since March, while Canadian softwood timber is subject to a 14.5% levy. According to Aniban Bosso, chief economist at the Associated Builders and Contractors, these expenses are putting further strain on the industry. Material prices will likely rise in the coming months, he said, urging industry players to monitor iron, steel, and aluminium prices. Though the impact will take time to unfold, contractors sourcing materials domestically may see indirect effects. Tariffs can still influence pricing and delivery times, notes Tim Jed, supply chain leader at DPR Construction. In the end, the real question is where materials are sourced from, which isn't always easy to track, he added. Through early 2025, non-residential material costs have surged 9% annually, while overall construction inputs are now 41% higher than in February 2020. Janine Cataldi of S&P Global warns that these rising costs, combined with trade uncertainty, could slow private sector construction investment. While ongoing projects will continue, future spending is at greater risk. Non-residential construction hit a record $1.26 trillion in February, but public infrastructure projects have driven much of this growth. Cataldi warns that rising costs, potential funding cuts, and labor shortages, exacerbated by Trump's immigration policies, could stall momentum. Labor concerns may outweigh material costs in 2025. Deportation policies could reduce workforce availability, worsening an already strained labor market. Trump's Liberation Day tariffs will test how businesses adapt to the changing trade landscape. While sectors like data center construction and infrastructure projects may remain active, tariffs still pose risks. Copper prices, vital for data centers, have already surged this year. The administration argues tariffs could pressure other nations to lower trade barriers, which Bosso acknowledges as a potential long-term benefit. However, higher costs could lead to project cancellations, especially for firms operating on fixed-price contracts. Bosso advises contractors to act quickly because tariffs are effective immediately. He urges them to be mindful of cash flow and avoid holding on to unnecessary expenses for an extended period of time. Jed adds that businesses should take a strategic, project-by-project approach rather than overreacting. There's no one-size-fits-all solution.